Are you ready? So, checking in with Mr. Wonderful himself, joining Kevin on stage is going to be CNBC's Deirdre Bosa. Deirdre, Kevin, do you want to come on out here? Let's give him a round of applause.
Hi, everyone. It has been just an amazing 2 days, hasn't it?
Yes.
My earring just fell off a secret. I wear clip-ons. That's my biggest fear. It happened early, so it's okay.
This conference gets bigger every year, celebrates entrepreneurship. I think it's fantastic.
Yeah, and I was just saying, you know, I'm based in San Francisco, and it hasn't really come back yet at all, but the ground here in Miami, it's just buzzing, the tech scene.
San Francisco is a very poorly managed city.
I will not disagree. And I don't know, I'm sure everyone's familiar with Kevin O'Leary. Never says anything controversial or...
Just the truth. That's it.
You know, I was watching your Squawk Box appearance from yesterday. I was going to start there, where you said that, you know Dante's Hell? Twitter's like at the bottom of it. You do not mince words. But Kevin, something else that's happened just now, and because we were talking about this backstage, we thought it might be a good place to start our discussion. Netflix reported its quarterly earnings after the bell, and the stock's down about 20% in the after hours. The first contraction of subscriber growth in the company's history. And it's kind of a window into what we've seen over the last 2 years. Tech ran up so much during the pandemic. A lot of that was pull forward, and now we're seeing this valuation reset in the public markets, and that's starting to affect the private markets as well.
You know, I don't think we should be surprised about the outcome of Netflix, because it was truly a pandemic baby in terms of the amount of time you had at your fingertips to just watch it during that 2-year period. But there's a pent-up demand around the world now to get out, engage. Obviously, we're going through different phases of this pandemic, hopefully, you know, the end phase of it now. And I don't think that's going to be a big surprise, but it doesn't change one fact. I think the trend to continue onto the streaming platform will continue. Mm-hmm. And so Netflix will be the beneficiary of that. This is no different than the correction that Facebook, or now Meta, had. Stock got cut in half, basically. I anticipate tomorrow's going to be an ugly day on NASDAQ. But, you know, it doesn't change the fundamentals of technology and the digitization of America and all of these companies that are providing for this technology that people can communicate with. Netflix, they're still going to be a huge behemoth.
Right, and they've got so many subscribers to work from, but we're seeing this sort of across the board, this revaluation of tech. And you know, if there's entrepreneurs and founders in this audience that are looking at raising money, and valuations, the market may not be as hot as it was before. You know, you've obviously seen many, many companies, been through it, the tough times and the good times. What do you tell founders when you're entering sort of a tough environment, which this year looks to be with rising interest rates and geopolitical issues?
I think you have, if you're an entrepreneur and you're trying to build a business, you have to get ready for traditional volatility. We had this extraordinary period when the Fed was basically printing $4 trillion and throwing it out of a helicopter onto the economy. There was so much liquidity. Now, whether we print too much that gave us inflation or not, that's a big debate. We'll have it forever. But during that period, the volatility of the private and public markets was remarkable. There wasn't any. Mm-hmm. And so now, when I see this kind of thing, or a stock get cut in half or trade down 23%, that's how it usually works. That's traditional volatility, and there's ups and downs, and there's periods of difficult times to raise capital, and then it's liquid again. Usually what you need is a big company to go public, and that opens the spigots up for smaller ones. This is business as usual. It's not, I've seen this movie before.
So the outlier was the pandemic when you saw all of these valuations?
Well, I think the outlier was printing $4 trillion.
Right.
I mean, that's unprecedented in any economy, anywhere, ever.
To combat the pandemic, though.
Well,
effects.
Yeah. You know, all of those programs in the beginning, those PPP programs, if you recall, I'm going to say now that 2/3 of that was wasted. Because I watched that happen. We were giving money to companies that didn't need it. We were just doing whatever it took. Now, you could argue that you needed to do that in a time of maximum chaos in Feb, March, April, May of 2020, that gave confidence to the economy, that the Fed was there, and I buy that. but we didn't stop.
Right.
We kept printing money as if that was the answer for everything. And now you're wondering why chicken's up 48%? Well, guess what? Like, you know, too much cash flying around. And I'd like to see that policy stop. I don't want any more money.
Which it is. So what are the effects of that now, that you take away the so-called punch bowl? Do you think that, I mean, the R word is being thrown around more and more now, recession?
No, I don't
think
see it yet. I don't
major?
see that, actually. A lot of this inflation is transitional in the sense that we've destroyed the supply chain, not just domestically, but internationally. And that's causing, you take a company, one of my companies called PRX Gym Equipment out of Fargo, North Dakota. We used to source all of our components, barbells and seats and whatever we needed from various markets around the world. And our prices were 30% cheaper. Now we can only find these components stateside because we can't get them to the LA port. So we've raised our prices a lot, and we've had no diminishment in demand, but that's inflation. And when we get the supply chain working again, we'll go back to the lower price because we have to be competitive. But that's going to take a few years. I think we made a mistake on energy policy. Shutting down pipelines and all that stuff wasn't such a good idea. It's not a great idea to let a Norwegian teenager set your energy policy. I never thought that was smart. Not that she's not wonderful, but just barking at oil. And I'm not I'm happy on climate change and all that stuff to do the right thing, but you have to have energy security.
Right.
And what we did was dumb.
So then your broader thoughts on ESG, you think that, is it important for companies to have their eye on it? I mean, even when we do a CNBC Disruptors, there is that question.
Well, let me give you a use case on ESG, which I think a lot of the entrepreneurs in this room are going to understand. Let's take one specific market, Bitcoin mining, okay?
I'm glad you went there.
I think that's a great place to go. Now, Bitcoin mining, the majority of coins mined were mined in China using coal burn fire in the early days of Bitcoin, which nobody wants to do anymore. Even the Chinese government doesn't want to do that. But a few weeks ago, you watched the EU try and ban proof of work, which would have basically shut down Bitcoin mining. Here's why this could be a good thing. So if you're an institution, like a pension plan or a sovereign fund that I work for in the indexing business, you're not allowed to own Bitcoin. It's just forbidden because it's not a regulated security yet. So the way that we would get access to the pricing of, or be exposed to the price of Bitcoin, is we would buy the shares of the public mining companies in the US. And if you look at their share price, it goes in tandem with Bitcoin, or it used to, until a memo came out of the SEC that said, well, we're going to start carbon audits. If you claim that you're carbon neutral, we're going to audit you. And everybody was using carbon offsets. Now, everybody knows that carbon offsets are, for lack of a better word, bullshit. There's no way you can audit that. There's no auditor that will ever sign that. It's never going to work. And so, companies like Riot and Hut 8 and Marathon and Hive, I mean, those are great entrepreneurial companies that built big franchises, but their power didn't come from sustainable sources.
Right.
We sold all that stock. And the stocks have been crushed because it's no longer tied to the price of Bitcoin. It's tied to the SEC memo about carbon audit. So they were the pioneers. They have the arrows in their back. Now, all of the momentum on data centers and Bitcoin mining is either on nuclear power or on hydro. That's a good thing. So all of a sudden, the private sector has moved to a renewable source because they have no choice.
Right.
And no institution wants to buy a Bitcoin mined on something that's going to get an ESG carbon audit. So that's a go full circle description of maybe it's not so bad. So all the dollars I'm putting to work back in Bitcoin are now in places like northern Norway, upstate New York, Montana, North Dakota, Tennessee Valley, hydro.
So even to go back a little bit, you were critical of the Fed and monetary policy over the last few years. Does that play into your interest and investments in cryptocurrencies as well, and Bitcoin specifically?
My interest in crypto comes from a slightly different angle. Bitcoin is not a coin, it's software. Ethereum is software. Polygon is software. HBAR is software. These are software projects. Every single tokened coin is a coder over a keyboard writing software. Now, some of it has no economic value, some of it does. I have elected to say, okay, I'm going to approach crypto the same way I approach an equity mandate. If you're an institution, here's a typical mandate. Let's say you're running $100 billion. That's a small sovereign fund. There's 11 sectors in the S&P. I believe that in the next 10 years, crypto and payment systems will be the 12th sector. That's my thinking now. It'll take 10 years for it to get there. But in a mandate that's typical in a sovereign wealth fund, you would say no more than 20% in any one sector, no more than 5% in any one stock. That's a typical diversification mandate. 99% of them run that way. I treat crypto the same way. I've now 20% my operating company in cryptocurrencies. I have 32 positions on. I don't own
32 positions within crypto?
within crypto.
So 32 different tokens?
You're right. But the ones I've chosen are ones that have some economic value to them, in my opinion. I don't own any, and I'm not against Dogecoin or this coin or that coin. That's Las Vegas. That's fun. When I go to Las Vegas, I take $5,000. I know I'm going to lose it all, and I come back entertained. I think if you buy Dogecoin as an investment, you're out of your mind. There's no economic value there.
Let me ask you something. When you buy a stock, right, when someone goes out and they buy a share of Apple, they kind of understand the demand for an iPhone. Do you think that if you are going to be investing in cryptocurrency, you need to understand the technology behind it?
No. You should try and figure out what's the economic reason that this will still be around in 10 years. Why would Bitcoin still be around in 10 years? Because it is a scarce asset. If you believe that, then you have to decide how much your weighting is going to be. For me, Bitcoin's 5% weighting in the portfolio, and it's very, very volatile. And the reason Bitcoin is volatile is virtually nobody owns it. When people say, oh, Bitcoin's at nearly $1 trillion, that is nothing in financial assets. That's a zero, rounding error.
Yeah.
Every single institution on earth that's running trillions of dollars, they don't own a single Bitcoin. So when they do own that and they put 50% or 1% or 2% allocation, there won't be any volatility anymore because there'll be people buying and selling it to the weighting in the fund. And I'm getting ahead of that. I'm making the assumption that day comes. You may not. It's a personal decision. But I'm very long on crypto because I see the economic benefits of payment systems, et cetera.
But clearly you're treating Bitcoin differently than you would treat a Dogecoin versus a Solana versus some of the other ones where you understand the technology.
Yeah,
So
I mean,
it's interesting. I was speaking to the CEO of Binance the other day, biggest crypto exchange, CZ,
Yeah.
and I asked him, how many cryptos do you hold? He said 2. I said, oh, he said, that's all. He said, I got a company to run, but he said that nobody, as a retail investor, should own more than 5.
I don't agree with him on that. We had a great debate over in Dubai. We don't agree on everything. That's okay. That's what makes a market.
He says you need to understand.
No,
You're saying the opposite.
No, you don't. You have to. Let's take, for example, the complexity of. Let's just use USDC, which is a stablecoin, which is not yet a regulated asset, but a great payment system. And so, what happened this week was remarkable. Fidelity and BlackRock, the most conservative mandates on earth, just put $400 million into Circle, the company that mints USDC. Now, if that's not a signal for you, I don't know what is. Because those guys are the most conservative in their mandates to protect wealth. They see the economic value of a payment system, and they are assuming the government will too. You've got the bill from Toomey, you've got the bill from Haggerty. They're specific just to stablecoins. Now, I'm one of those advocates of talking to government. I go up to the Hill all the time to meet these senators and give the use case for these things. Because they're people too. They want to hear why you would use it or not use it. And they've invited many private investors, and I'm just one of them. But those bills are moving forward. The Limis bill, 600 plus pages, contemplates a lot of different ideas in crypto. And so I see this policy coming. I think it's important, and I think it will eventually get into the institutional market.
And you've certainly started to hear that from the companies in the crypto space too. They want regulation. They want to know how to operate, at least the ones that want to continue. When you talk about Circle, do you think that stablecoins are transparent enough? And I'm thinking maybe less of a Circle, more of a Tether, which is the largest stablecoin. And I'm sure everyone here knows what it is, but it's basically the chips of the casino used in the crypto system to buy and sell different other tokens.
So the Toomey and Haggerty bill contemplate a very simple solution to this problem. When you think about something like a money market fund, you have to audit it. And you may say, like Schwab has its own money market fund, Fidelity has its own money market fund. Many institutions create money market funds, and they use short duration assets. You have to disclose on an audited basis, and in the Toomey bill and Haggerty bill, they contemplate an audit every 30 days, full transparency of the assets, and no asset with a duration more than 12 months. That makes a lot of sense to me. And so as long as the coin that's out there can abide by those rules and they get licensed, I would like to see 5 or 6 different stable coins compete with different attributes.
That's the issue, though. They will not get audited, isn't it? The stable
Well,
coins.
if those bills get passed, they will get audited. And I would like to see them get audited because I am not, in my own compliance department, allowed to use. I have a lot of cash at any one time that we're trying to put to work. I'm getting 22 basis points for it when inflation's 6.4%.
Right.
So I'm being taxed at over 5%, but I can't get any kind of yield off it unless I put it into a stable coin and stake it out. And I can make 4 to 6%. So when I go to my compliance department and say, look, we're going to put X million to work, and they say, no, you're not. We can't get our auditor to sign that. And so we need to get this resolved. And I'm a big advocate for just that. We should just pick one of these pillars of value. If you like stablecoins, let's solve for that first. Then let's go to Bitcoin. Let's go to Ethereum. Let's go to some of these other blockchain
The
projects.
problem is policymakers move very slowly.
Well, I think we're not going to have any policy for the next 36 months because, and I don't want to get into politics, but every single sitting president, regardless of which party they're in, loses seats at the midterms. This midterm is going to be historical in terms of power shifts. You know, I'm a bit of a policy wonk. I'm just watching some of these. There's not going to be any Build Back Better. I can tell you that. That's not happening. And there's nothing going to be happening. We're going to have gridlock in Washington for the next 36 months. And in my view, that's a good thing. Enough. Let's just let the economy do its thing on its own now.
Well, I want to talk about some of the exchanges as well. I know that you're an investor in a Canadian exchange called WonderFi.
Yeah.
Also notable today, I believe Coinbase actually fell to its lowest level since it went public.
Yeah.
And you know CZ at Binance. Last time I spoke to him, he said that he was going to bring fees to 0. How do these exchanges continue to make money?
So there's 2 types of exchanges in the world. I'm taking a different view than the CZs and others. Let's talk about the Canadian market because it's very advanced in policy. And I have a thesis about this. The OSC, which is the regulator in Canada, the largest regulator in the province of Ontario, works very closely with the SEC. These regulators there's a bond of 7 large ones and they talk to each other every day. My thesis about the Canadian market and how advanced it is, it was the first market to allow a crypto exchange with a dealer broker attached to it. That was called BitBuy. WonderFi bought BitBuy just a few weeks ago, actually. And then yesterday bought another exchange called Coinberry. These are regulated by the regulator under an order of the regulator. So they are only allowed to trade a few coins, a little Ethereum, some Bitcoin, maybe one stable coin. And they allow the Canadian citizens to download the app in any province and actually have their own personal account. Now, my thesis about this, even if fees go to 0, which that's just same as doing stocks, is in order for a Canadian bank that's servicing its accounts, or a bank in the United Arab Emirates, or a bank in Brazil, or a bank in Peru, or a bank in Mexico, or a bank here in the United States, if all of a sudden a client says, I love your stock, I can buy stocks and bonds, but I'd like to put 5% into Bitcoin. Well, how are you going to do that without an exchange? Thank goodness you know me, because I'm going to try and open that up with the Canadian banks. They have one of the best banking systems in the world. They can only do it on a compliant service. So what I'm all about is compliant crypto. If I don't get a license from the government I'm operating in, I don't want to own it. So everything I've got in Canada now, and I'm consolidating those licenses, I work under the order. The same, I'm disclosing now, I've applied for a license in the UAE. I've been working with the regulator now for 2 years, and I'm now an Emirati citizen. So I'm proud of that because I want to work in financial services there. The Emirates is it's not a democracy, you understand. It's run by the Emirate of Abu Dhabi. And so you have to work with the regulator there. it's in some ways better than a democracy. You can get stuff done there. Like you can actually get it.
Well,
you can actually meet with the government every day. And
we can debate that another time. But is
well,
this?
you have
we won't get into it.
Well,
here.
let me give you some stats now that I'm an Emirati. 52% of the government is women. Women are a major. Anyways, I don't have to get into an advert.
Is that the model then, do you think, for Coinbase eventually? And is that what crypto traders want, though, at the end of the day?
No.
Do they want
no,
derivatives and do they want interest-bearing accounts? And
if you're in my world where I operate in the financial services industry all around the world, I don't have an option about whether I can be compliant or not. I never want to get into a debate with the SEC, ever. I only want to understand the rules of the game and play by them and compete under the rules of regulation, because in financial services, the whole world works on trust. That's what matters. And the number one regulator on earth is the SEC. Their policy turns into policy everywhere else except China. And I wouldn't want to own anything in a Chinese currency at all. So for me, it's what the SEC wants to do. Now, my path into crypto is to say, okay, let's work with the regulators, let's work with the lawmakers, let's work with these bills, let's solve this problem, and then I would like to amass as many compliant licenses and exchanges as I can in the world. That's an investment strategy. That's exactly what I'm doing. And let's see who has created more value long term. The regulated exchange or the cowboy crypto? I'm making a bet.
But everyone wants to be regulated now. So you are going up against the bigger exchanges.
The problem is, if you take a bigger exchange like a Binance and regulate it, it won't be anywhere near as profitable as it is right now. That's not going to be easy to do. If you're not regulated, you can trade anywhere you want, unfettered, and make a ton of money. And they do. And I'm very proud of what he's built. That guy has built something extraordinary. But that is not going to work in a regulated environment.
So I guess it comes down to the question, how do you regulate? And you say that you talk to policymakers. How should the SEC, for example, or should it be another body, regulate DeFi, decentralized finance?
You know, I really think it starts with bipartisan policy, and we have that happening right now. I look at these bills that are coming through. When I got my chance to sit, at the Senate for 4 hours and talk to them, it was a bipartisan group. I mean, Ted Cruz was there right beside Democrats. I've never seen that before, and I thought to myself, I must be in the metaverse. These guys never talk to each other. But we talked it through, and I encourage them, along with I'm sure others have done the same, is don't try and solve all the problems. Let's pick 2 or 3 assets. Let's make policy on Bitcoin. Let's make policy on Ethereum. Let's maybe do 2 other blockchains, maybe Solana, which offers speed, and Polygon, which offers a level 2. There's a bunch of different projects that have already created a lot of market cap that are trading quite liquidly. Let's do those. And then let's do a stablecoin for payment systems. Let's try and deal with NFTs. Tell me if they're a security or not. I mean, somebody says to me, oh, I'm going to do an NFT and it's going to pay interest and it's going to have utility to get Formula One tickets. That smells like a stock. Right. You're just begging.
You say it should be regulated as such.
I mean, why would you even risk doing that? You're screwing with the primal forces. Why would you do that? I mean, I asked these NFT guys, are you out of your mind? Like, you're poking the bear. You can't issue something unregulated that issues interest. That's crazy.
Well, we have covered a lot of ground. I think we've gone over our time, Kevin, which I feel like we could easily go for another 40, 45 minutes. But it's been wonderful to chat with you. Last question. So then what are your top crypto holdings? What do you hold the most of? So
I'm maxed out at 5% in any one crypto because I go by that institutional mandate. But I am very, very constructive on Bitcoin, obviously 5%, Ethereum 5%. I've really stepped up on Solana now because I'm starting to see the merit of speed. And I'm a big fan. I have to disclose, I own a piece of FTX. I'm also a paid spokesperson for FTX because that's the platform I use for a centralized wallet. For me, it's the only one that is institutionally compliant. I can get the reports off it that I can show my auditor. And a lot of these, Sam Bankman-Fried's team is about solving for institutions too. Right. And so, I get that feedback. We try and make the reports so that we can say, look, here's our trading record in the last 24 hours on this coin or that coin. Because remember, this year, the year we're in right now, we have to report to the IRS. Yeah. And there's no compliance infrastructure yet. So it's going to get really interesting because if you're making money trading crypto, you better make records.
Huge tax implications.
Yeah.
Well, it has been a wonderful conversation.
Thank
Mr.
you.
Wonderful, help me in thanking him, please.
Thank you, everybody.